This is Gracelyn Keller with the Becker Business and Private Equity and Becker Business Minute podcast, and I am joined today by Rick Kes, who is a partner at RSM. So Rick, thank you so much for joining me today, and I would love to hear about some of the trends you're currently watching in private equity.
Yeah, thanks for having me, Grace. I'm Rick. I'm a partner at RSM. RSM is the leading professional services firm to the middle market. For us, that means we do work with a substantial amount of private equity groups at the fund level as well as their portfolio company level. I think there's no secret in terms of what we're watching. Today in particular, we're watching interest rates. And the FOMC meeting is today, and we'll see if they decided to increase rates another 25 basis points or not. I think there's some debate on both ends of that spectrum to support and detract from a rate hike again. Especially on the heels of kind of the banking related turmoil that we've seen in the last couple of weeks. So we'll definitely be interested to see how that decision shakes out in just a few hours. But from an overall perspective, I think the interest rate environment has created some new opportunities, we'll call them, for our clients to really think about their current business and how they find value and create value in the companies that they already own versus perhaps relying solely on growth being through acquisition. So we see a lot of our clients figuring out maybe if it's a expansion play, they're looking at de novo opportunities, or if they're not looking at to expand, they're looking at opportunities to improve their overall efficiency from a business model perspective by, perhaps, implementing new technology to become more efficient, or, perhaps, changing some of their operating model and some of how they, structure their people to, again, drive efficiency and growth of EBITDA through reduction of expense versus, kind of traditionally more focused on growth and revenue. So, I think that's, obviously the biggest thing that's occurring today in our perspective is, interest rate environment. But, the other things that we continue to kind of monitor, which are, slightly related or maybe more than slightly related to the interest rate environment is, labor and inflation. Labor continues to be a challenge, but, I think on, some other perspectives, seeing some of the job cuts by large tech companies in the recent weeks, maybe some of that challenge will come back to more of a normal, sustainable level. And inflation, kind of works, a little bit in concert with the interest rate environment. So, obviously those are the impacts that the Fed monitors to figure out if they should increase rates or not. But that's kind of the big three for us is interest rates, inflation, and jobs. And, I think all of our clients continue to kind of be interested to hear and observe what's going on in the environment related to those items.
Wonderful. Well, thank you, Rick. Do you have anything else you'd like to share?
No, I think that's primarily it. I'd say we're just kind of waiting to see how the FOMC meeting shakes out today, and then we'll go from there.
Well, thank you so much for taking the time to join us today on the podcast and share your thoughts on what's going on right now in private equity.
Of course. Thanks for having me, Grace.